Hello, welcome to the academic sessions, and today you're going to have a practical exam questions relating to recording of transaction in the journal entry or journal proper. And this concept can be traced back to the concept relating to the accounting cycle, whereby the accounting cycle starts with the recording transaction in the journal entries after reading the necessary source of documents, for example, receipts, invoices, debit notes or credit notes. So the first step after identifying the source of document, we should record the transaction in the journal entries, and it's appropriate to follow the golden rule of journal entries. The double entry system. So before checking our question, we may have a short way to understand on how we are going to record this transaction in the general journal. So this is a golden rule, which will be our blueprint in order for us to understand on how we are going to record the transaction in the general journal, and later on how we are going to post it in the ledger. So the golden rule, first, for personal account, this account is the account which deals with the name of the individuals, that it means that the debtors or creditors. For personal accounts, we should debit the receiver or the person who receives the amount of money or goods, and we are going to credit the giver. So this would be our golden rule. But for real accounts, these are the accounts which are real. For example, for assets, and they are most of the time they are tangible, and we are going to debit what comes in, and we are going to credit what goes out. And lastly, for nominal accounts, this are the accounts for expenses and incomes. We are going to debit the account for expenses and losses, and we are going to credit the account for incomes and gains. So this will be the golden rule on when we are going to record our transaction in the general journal. So after there now, we are going to record our transaction. So the question says that either the following transaction in the general journal and post the entries to the ledger. So the first step we are going to record the transaction in the general journal, and later on we are going to post it to the respective ledger. So on 2020 January, on 1st January 2020, Diana started business with depositing 2 million into the bank account. So in order to understand here, you should identify the two accounts affected. So Diana started business, it means that he started with capital and deposited that amount in the bank account. So here we have the two accounts. We have the capital account, but also we have the bank account. So bank account is a real account, so we should debit it because it's an asset, but capital is as a credit nature and it's a nominal account. So we are going to debit the bank account and we are going to credit the capital account, because bank is an asset, there's a debit nature, and capital, it has a credit nature. So it will be 1st January. So we'll start by debiting the bank account, and we're going to credit the capital account. And when recording your first debiting, then we are going to credit the amount, and you should leave this space in order to show here it will be 2 million, and here you're going to code 2 million. So this will be our first transaction and will be being capital deposit in the bank, but I will not show the narrations here. So this will be our first entry. So the second entry will be on 4th January, whereby purchased the machine worth 200 million on credit from Alpha. So we purchased the machine on credit from Alpha. So here we'll have the two accounts. We'll have the machine accounts, but also we're going to have the accounts payable account or creditors account, who will be Alpha. So machine account, machine is a real asset. It is an asset, and it falls in the category of the real account. So when you're going to the golden rule, real account, you're going to debit what comes in, and machines were purchased. So machines are the debit nature, and we're going to credit Alpha account or accounts payable, because these are liabilities and have a credit nature. So on 4th January we're going to debit the machinery account. Some of students, instead of writing machine, they are writing purchases. We're just writing purchases if it's the purchase of goods, but when purchases relate to a certain product, we should write that product's name. So we're going to debit the machinery account, and we're going to credit alpha account. Alpha account in bracket creditor account, because alpha is a creditor and the creditor as a credit nature. So machine is an asset, that way I've debited it, so it will be 200,000. So the next transaction will be purchased goods worth 400,000 on credit from Julia. So purchased goods, it means that hatujatajua item alone. So we're going to use the purchases account, and we're going to have another credit account will be Julia. So purchases is an expenses account, and expenses as a debit nature, and Julius is a creditor, and the creditor has a credit nature. So on 8th January, we are going to debit the purchases account because it's an expenses, and we are going to credit Julius account, who in brackets will be a creditor or accounts payable, and the amount would be 400,000. So after there, the next transaction will be sold goods worth 150,000 by cash. So 12th January, sold goods. Sales is a revenue account, and revenue has a credit nature, while cash is an asset and it has a debit nature. So we are going to debit the cash account. Now going to credit the sales account. So we're just following the nature of the account and the double entry principles. So for every transaction debited, we should have a corresponding credit entry in every account. So after that, we're going to the next, which would be 16th January. We withdrew 200 from bank for personal use. We withdrew 200,000 from bank for personal use. This is a contra entry, and we'll have two accounts. We'll have the cash account and also a bank account. So we withdrew cash from bank for both cash and cash, both bank and cash as a debit nature. So here we're going just to see the effect of the transaction, if it's an increase or it's a decrease. So we withdrew cash from bank, it means that the bank account has decreased by 200,000, while the cash account has increased by 2,000. So if the cash account has increased, we should debit it, cash account, and we're going to credit the bank account because it has decreased, the bank account, and the amount would be 200,000. So after there, we're going to the next, which will be 20th January 2020. And on 20th January, sold goods to Tandaimba Limited worth 50,000 on credit. So we'll have two accounts. We'll have the sales account and we'll have the Tandaimba account, who in this scenario will be a debtor or accounts receivable. So accounts receivable are assets and they have a debit nature, while sales is a revenue, it has a credit nature. So here we'll have Tandaimba Limited. We're going to debit Tandaimba, who is a debtor because we sold goods on credit account, and you're going to credit the sales account because it's a revenue, so it has a credit nature. So the amount will be 50,000. So all credit transaction will not be posted in the cash account because no payment were received. That's why we are not opening the cash account for the credit transactions. On 22nd January 2020, a return goods was 15,000 to Julius because they are of wrong type. So sometimes goods may be returned, and when goods are returned, it means that return goods will have two accounts here, whereby we are going to have the sales account. We're going to have the purchases returns account, or return outwards, and we're going to have the accounts payable account, or the creditors account. So hapa ulinunua bidhaa from Julius from ile tarehe 8, purchased goods lakini leo umerudisha. So if you have returned, it means that you should now debit Julius. So the goods which we previously bought from Julius, now we have returned it. So kama tumerudisha, maana yake tumepunguza creditor. So we are going to debit Julius account. Julius, maana creditors zimepungua. Julius, so credit account or accounts payable, it's up to you which name could be appropriate. Julius account, and now we are going to credit account known as purchases returns account. Purchases returns account, and mind you that purchases returns is also known as return outwards, so you can use either of the names, and we are going to debit 15,000. Going to debit 15,000. So this 28th paid Julius 200 by check. So after, remember that we bought goods on credit. So on 28th, on 23rd, January 2020, we paid Julius. So when we paid Julius, we'll have two accounts. We'll have the by using check, so we'll have the bank account and not check account, as most of students write. We have the check account, bank account, and we'll have the Julius account. So when we paid Julius, it means that tumepunguza deni. So on 8th, we bought goods cost 400 on credit, and we return goods costing 15,000. So we paid Julius. So we're going to decrease the amount outstanding, who will be a creditor, because credit as a credit nature. So when we pay, it means that we are depriving the amount in Jews. So we're going to write here, and the cash account will be credited because tumepunguza hela. So we're going to credit the cash account $200. And we're going to use the bank account because we paid through check. So here we're going to debit the bank account. So after that, we're going to the next date, which will be on 24th January. Paid wages by check. So we have wages account and the cash account. So wages is an expenses, it has a debit nature, and cash is an asset, it also has a debit nature. But here we are just going to see the effects of increase or decrease. So paid wages, it means that we have increased wages. By check, by cash, it means that we have decreased some amount of cash. So you should debit wages account, and you should do credit cash account because it has decreased. So it will be on 24th, we meet 30,000. So after there, we're going to the next date, which would be on 26th January. We withdrew 100,000 from bank for personal use. So we withdrew some amount of money for personal use. So we'll have two accounts, whereby we have the drawings account and the bank account, and both as drawings is an expenses. Drawings is as a debit nature, and the bank account is the asset as a debit nature. So you are going to see the effect of increase or decrease. So with the drew 100,000, it means that drawings have increased. So we are going to debit drawings, while the bank account will decrease because we have reduced some amount of money. So we are going to debit the drawings account. So we are going to debit the drawings account, maana drawings zimeongezeka, and we should credit the bank account, maana hela zimepungua. So that is the general concept of double entry. We're just going to see the effects of increase or decrease of these accounts according to their nature. So that it is, and you're going to the next date, which will be on 27th January. So purchase goods from Frida Wozi 150,000, promising to pay them later. So here we have two accounts. We have the purchases account because tumemba purchased goods, ni goods gani, and also we have the Frida account whereby Frida patakuwa kama accounts payable au creditor. So they're going to debit the purchases account and we should credit Frida account or accounts payable. So hapa inabidi ya ku credit Frida or accounts payable au jiange tunaita ni creditors account. $150. So the next transaction will be on 27th January. Purchase good on 28th. Tandaimba Limited return goods was because they were expired. So Tandaimba who we sold goods on credit to him, sasa amerudisha. Remember that tukimuuzia maanake tutamdebit, maana debt ameongezeka, lakini sasa karudisha maanake credit zimepungua. So kama amerudisha maanake Tandaimba sasa hivi tutaenda kumcredit and we are going to debit an account known as sales returns account. So we are going to debit sales returns account or sometimes known as return inwards account. Alafu tukaenda kumcredit Tandaimba maana debt amepungua. Tandaimba who is the debtor tutaenda kumcredit 5,000. So after there we're going to the next transaction, it should be on 29 January. So you should finish this date 2020 because there's a space imekuwa ndogo, ndo maana they say that received the rent in terms of cash. Received the rent. So this is a rent received, and rent received na is a revenue, and revenue as a credit nature. So tumepokea rent in terms of cash. So we're going to debit cash, maana cash zimeongezeka, and we're going to credit an account known as rent received account. Rent received account, lakini ingekuwa paid rent ingekuwa tofauti. So cash 50,000 and there we're going to code 50,000. So hivyo ndivyo. So last day will be on 30th January. Received the payment in terms of cash from Tandaimba. So Tandaimba ametulipa, so we are going to debit bank account because ametulipa kwa check. So we are going to debit bank account and we are going to credit Tandaimba account, maana debtors wamepungua. Tandaimba who in bracket is a debtor. So that will be our final transaction, and this is the first step in the recording of journal the accounting cycle, whereby after reading the source of document we are going to prepare the journal entry, and hii ndio jinsi ya kufungua journal entry. Hapa tu tafuata ile general rule, but also nimetumia ile knowledge ya nature of accounts, whereby the expenses, assets and drawings as a debit nature, while the revenue, capital and liabilities zina nature credit. Na when I say kwamba kitu kina nature debit, it means that when it increase ndo tunakidebit, lakini in case zika decrease tutaki credit. Same as when I say account zina nature credit, maana yake zikiongezeka ndo tutazicredit, lakini zikipungua tutazidebit. So by using that knowledge we are able to prepare our journal entry. Mind you that you should identify the two accounts affected, and bila kuidentify account zako mbili itakuwa ni ngumu kuandaa. So this is the first step, and after here we are going to see the second procedure whereby we are going to show the ledgers, but also on how we are going to show the trial balance after here. So thank you and welcome to another session.